Okay, good afternoon, everyone. My name is Harry Singh, and I'm the chair of programming for CFA Society Winnipeg. Thank you all for coming in today for this event for careers in finance. I truly appreciate everyone attending, and I thank all our panelists and our other partners, CFA Society Saskatchewan and Canadian Association of Alternative Strategies and Assets, to make this event possible. But before we begin, I would like to acknowledge that we are gathered today on the Treaty 1 territory, the traditional land of the Anishinaabe, Cree, Oji Cree, Dakota, and Dene nations, and the homeland of the Red River Métis. We also acknowledge that the water we drink and use comes from the Shoal Lake 40 First Nation. So we would like to acknowledge that and thank. Before we also, start the panel discussion, I would like to introduce James Burron. Some of you may have seen him at previous events. He's quite a famous face, specifically talking about careers in finance. James been key to this event, and CFA Society Winnipeg in Saskatchewan are thankful to that. About the CFA Society Winnipeg, it has served the Winnipeg investment community for over 70 years by promoting ethical and professional standards within the investment industry. The society is an active participant and innovator within the CFA Societies Canada and the CFA Institute Global Network. And about James, what I wanted to say is that he has co-founded the Canadian Association of Alternative Strategies and Assets in response to the industry support for Canadian alternatives to serve all aspects, including hedge and alternative strategies, liquid alternatives, private lending, private real estate, private equity, plus emerging areas where Canada is leaders such as digital assets, blockchain, and robo-advisors. So James has a very broad work experience as well. He was the chief operating officer for IMA Canada, where he worked with 12 committees to produce about 50 to 60 events per annum. So he has a really broad experience in terms of delivering these kind of events and he has organized over 100 committee meetings during a span of 7-year tenure. And worked with anywhere between from 66 to 164 corporate entities, which gives him this experience that he can, bring on people for the panel discussion and share their experience. James currently sits on the Canadian Investment Funds Standards Committee, which categorizes mutual funds and alternative mutual funds, which are also known as liquid alternatives for the retail space in Canada. He's also called upon by membership and industry groups to speak to risk ratings and portfolio placement of all types of alternative investments. And James has been working in the industry for a very long period of time. James is also a CAIA Chartered Alternative Investment Analyst designation holder since the year 2006, and as well as he's serving on CAIA's exam council and helping them with other duties that are required. He had roles in institutional sales, fund of hedge funds in Seoul, South Korea. He also worked for India's one of the largest private bank, ICICI Wealth Management, as a product manager. And he has worked as an investment advisor with RBC Dominion Securities at the same time throughout his years of experience. So he's a well-achieved professional who will be helping us conduct the panel discussion. And James is a graduate from the Simon Fraser University with a degree in BBA, specializing in finance. So James, without taking much time, I'll let you take the floor, please.
Holy moly. Thanks, Harry. I feel like we're at time already, but sorry about the long intro. Yeah, I think this is awesome. Yeah, and we've actually, I think at CAASA we have like 425 members, but I've got a short deck and we have we only have an hour and a half here, so I'm going to go through it fairly quick. I'm going to send it to Harry and to Eva to send out to all the to anybody who'd like it, or to everybody who's here. Just kind of give background on the industry, and then we'll get into we'll do self introductions, and people can focus on whatever they like. Because Rob has got a lot. Rob's gonna have to tell us exactly where he went to school, because I didn't have that on LinkedIn. And then we have, but he's been around for a little while, and then Sheena, relatively new, and then Nevin, our friends from the prairies, actually out in the prairies as well. So let me just okay, where is it here? So what do you need to know? You know, basically, but not many. So people know about real estate. Usually, we hear a lot about private equity, somewhat about private lending, especially if someone's working in a bank, as Sheena is. There's bank lending, there's private lending. Not many know about this other area called hedge funds, which when I was running AIMA is it's kind of a big. It's getting to be a bigger deal. It was about 30 odd billion, which isn't that big in the global scheme of things. But you'll see that there's a thing called liquid alternatives that's come out, basically mutual funds that run hedge strategies that are bigger than the usual kind of hedge fund market in Canada. Most people think they're these unregulated pots of money that roll around and destabilize. This is back like in the 90s they were doing this, destabilizing like the Thai baht, and they're super risky. They create a lot of wealth for people that are already wealthy, and everyone who works in them is extremely rich. Guys like Rob. But some of that is true. But they are in Canada, they're all regulated exactly the same as a mutual fund. So you have to go through these. You have to have your CFA to run money. You have to have compliance and such. There's oversight from the Securities Commission. There's usually liquidity, like you're able to get your money out on a daily basis from some of these funds. So not all this stuff that you hear and read about in the paper is true about so many things, not just alternative investments. There's not a ton of leverage. It's only about 2 times, which isn't a lot. And in Canada, it's actually less than that. So the long and adding up the trades from both sides of long and short, which is selling something you don't have, it's things that people might have covered in school or read about. But it's still a pretty small part of the Canadian market, and so it's not like the hedge funds are destabilizing the market. It's a few billion versus trillions of dollars in the long only markets. Uh, and before if you're rich, like $1 million, then you can buy hedge funds. Now anybody can buy them, which I think is fantastic because that's where that's what I do. But it's important to have these strategies in people's portfolios because they're very good at lowering the risk, diversifying an overall portfolio, and adding return. So we'll get into some of that here pretty quickly. But like generally, we think that Canada's a bunch of small managers. Yeah, we are. So is everybody else. Like the manager in Winnipeg or Toronto or whatever that was running $5 million, you might see them because your parents know they're the guy running it or the gal running it. But there's a $4 million US fund in Connecticut that no one's ever heard of, but it's there. There's a £3 million manager in the UK. We don't hear about it. We hear about the $30 billion managers. So we have a lot of perspective bias, but if you look at the numbers, it's a very similar stratum to the rest of the world. We don't have the $99 billion managers like AQR, or the $100 billion managers and that, but we do have a fairly similar stratum into the rest of the world. And it's like most things, the larger ones have the bulk of the assets, because they're the larger ones. And there's a few of them, and it moves around, but there's always quite a few in the farm team in the middle, and then there's the up and comers, the emerging managers, or the ones that are running off or closing. The returns, I gotta get some new returns out of these guys, but basically you can see that the hedge fund strategies do about as well as the stock markets, and the ones that have lower volatility, like the arbitrage ones, have lower volatility, and also have lower return. But if you look at I'll go to this one first. So that over this time frame here, the Canadian hedge fund industry did had about the same return as the S&P TSX, but with half the risk. So theoretically, you lever this thing up, you get additive risk, you get double the return minus the financing, and you get a better return overall. This is pretty typical, where you'd have a pretty low overall risk in hedge fund land versus the long only, which is just buying and holding stocks, whether it's a mutual fund or a pool portfolio. And if you look at the 13%, the 13.34% of risk, the volatility of the TSX, the riskiest strategy, so to speak, of volatility, is the equity directional at 14%. Everything else has a lower volatility, going down to as low as 3 or 4% of market neutral. So when people talk about hedge fund being risky, they couldn't be further from the truth. And looking at the correlation, it's not one. Well, it's one for equity directional, of course, but for a lot of the other ones, it's a half, 50% or less, close to zero. So these things really do well within a portfolio. And so again, it's where the headlines don't tell you even close to the story. Never mind being off by a little bit. So what do we have now? We have these liquid alts. Anybody can buy them. They're sold very prospectus, just like actually MFDA is part of Ciro now, so they'll be able to buy all of these. standard trade processing, which I think is actually T+1 now. And they're available for everybody. So you can get the hedge fund strategy that was only available for the richest people in Canada a few years ago. This came out 6 years ago, actually. We worked on this legislation, or came out 5 years ago. We worked on this legislation for 6 years. So here's a snapshot. Remember I said it's 30 billion in hedge? It's 47 more in the alternative funds. 176 funds. This is from Picton Mahoney. They own Second Engine. It's a second separate company, but they have tons of information here. It's all available on our site. We have a publications page at CAASA.ca, and here's by strategy. They have the flows and the returns and such. So lots of cool info, and that's and this is like when people say everybody's into private markets and such. Yeah, there's a lot of private markets going on, but there's also something to get from the hedge fund side. And then here's some more the composition of the strategies and where the popular ones are. Fixed income is big. You can see equity long short is fairly big as well. Because with fixed income, you can make money when bond markets are going up or when interest rates are going up. You don't have to lose money like you would have with your bond portfolio. Last year, rates went up by 5%. If you have a 10-year zero, you've lost 50% of your money. It's gone down by 50%, the value. That's just simple math. Not so with a long short fund. Here's how they did before the COVID crisis. Basically, the returns were about the market, as you'd expect. During COVID, killing it. Those box and whiskers are way above what the markets were because they were shorting, because they had better risk processes in there. So what can you do? This is what we're going to start talking about. So a lot of people go right to line 4. I want to be an analyst, portfolio manager, chief investment officer. I know Nevin has this chief information security officer. That's a different eye. And then there's, operations. If you're into accounting, chief operating officer, chief financial officer, chief compliance officer. Chief legal is more for the legal folks in the bankruptcy funds. But there's a lot of things that people can do if they're not really into just looking at stocks and bonds. There's a lot of things in the industry outside of the funds. There's prime broking. Every bank has a prime brokerage operation where they basically allow giving leverage and execution services and custody to these funds. And then the sexy side of that is capital introduction, which is kind of like what Rob does, except within the bank, they'd be trying to get money for the funds that are on that platform. It's a totally different world that you've probably never seen. And then if you go through legal and CPA world, then there's legal, obviously, at the law firms, audit firms, fund administrators, due diligence at a pension plan, at a family office, at a fund of hedge funds, and God forbid you go into sales where the real cheesecake might be. You can sell funds, you can sell technology, you can have other consulting things. So it's entirely different from what people might think, where it's just go in there and look at stocks and bonds all day and try to put trades in. This will be on the list. I love some of these books, like The Match King, which is actually he invented the 40 Act was invented because of Ivar Kruger. He did a lot of bad things, and as usual, the regulations were catching up with him. Fool's Gold, Jillian Tett, the CDS credit default swap were invented in Boca Raton by a bunch of JP Morgan bankers who decided to try to get a new way to make money. That's how some of this stuff starts. It's become these amazing stories. This is stuff about you can look at this like CAASA. We're the biggest trade association in Canada, and we have tons of things like this is our 12th career panel. So let's get to the careers. Robert, let's hear about what the heck did you just go right out of school like 2 years ago and start working or what? Let's hear your story, and we have an hour. No, you've been doing, and then did you know that your job existed when you were in school? Did you think, yeah, I definitely want to be in this hedge fund land?
Yeah, I'll try and be brief, but get through a little bit of this anyway. So I've been in the financial business just over 30 years. I started in the business as a retail investment advisor, and then left the business in 2000 and started up a hedge fund company with a couple of partners. And for the past 24 years, have been focused on building, starting up, building, and managing 3 different alternative asset management firms called Bluemont Capital, Man Investments Canada, and now Next Edge Capital, which we started up 10 years ago.
Wow.
Right now, I'm predominantly focused on helping run this firm. I try to always spend part of every day trying to build business as opposed to, I consider being overhead sometimes, but every role is quite key to a business, that's for sure.
Mhm.
And, in addition to Next Edge Capital, we have a lending business as well called Garrington Group. That a North American lending business that I help manage as well. I sit on a couple of boards with regards to how I got into business, or did I even know that this job existed. Initially I wasn't even planning on getting into the financial business out of university, so that's maybe a good start. When I did make the mental focus upon being unsuccessful at what I was going to try and do prior to doing a 180, I took my Canadian securities course and conduct and practices exam, and my goal then was to focus on becoming an investment advisor. But I guess a simple answer, and I got a little story behind there, but, as far as what I've been doing the last 24 years, which is, involved in the alternative asset management industry, when I was in university, coming out of university, that industry didn't even exist yet in an investable format in Canada.
Mm-hmm.
So that was one of the opportunities that we saw to set up a business to focus on that, with some of the things that we saw globally. But, as far as, a quick little story as far as, how I got my first job in the business, which, might, some people might understand that sometimes it's easy for people to get their first job and sometimes it's not. It wasn't for me. When I decided that, I was going to get in the financial business, I wanted to become an investment advisor, or back then it was called a stockbroker. I was living in Kitchener-Waterloo and decided that in order to be in the financial business, I wanted to be, move to Toronto. Kind of wrong, but, it's definitely afforded me a lot of opportunities to be here. One of my buddies was working on the Toronto Stock Exchange and living in Toronto, so he allowed me to move in with him, and I slept on his couch and paid no rent for a while. Tried to network through him in the sense that he'd go out with a lot of his trading floor buddies and get to know as many of them as possible, even though I probably couldn't afford the beers. A lot of them were paying for it anyways a lot of times, so it was kind of okay. And then I really knocked on, I literally reached out to almost every single brokerage firm in the greater Toronto area. I showed up with a resume, talked to the receptionist, follow up with phone calls, asked to speak to the branch manager, the assistant branch managers, got a few interviews, but, didn't really get a job until one. I had a good chat with this branch manager at a firm called Richardson Greenshields.
Oh, yeah.
He felt that it was a little green at the time, but that one of his top advisors was looking for help on business development. And would I mind for him to pass the resume on to this person? And I said, that would be great. The next day I got a call from this advisor and we chatted. We had an interview a few days later and he hired me to start the next day. And, he's currently my business partner and predominantly my business partner for over the past 30 years. And
who's that, Tori?
That's Tori, yeah.
Oh my God. That's amazing.
So that very successful investment advisor was only in the business for just over a year. So the branch manager fed me a little bit of stuff there, but it's been a very successful and rewarding relationship. And it was just, persistence and not giving up,
resistance,
getting the foot in the door. And then within a year, I went through the rookie training program and he and I became partners as investment advisors. And then a number of years later in 2000, started up the first hedge fund company. So that's a little bit about the start of my history anyways.
Oh my God. Wow. Awesome. And Sheena, this might be a bit shorter story, but I know how did you get your job? What drove you to that? And then I guess you probably did know it exists when you're going to school, but let's hear your story.
Yeah, so I mean, I'm sure everyone, well, first of all, just thank you, James, for inviting me part of this panel. I'm really excited to be here. How did I get this job? I was in school and doing my Master's of Finance program, and I was at an event where RBC had brought their chief economic advisor to the school to have a discussion on, what's going on. And I ended up meeting my future leader at RBC there. And we just had a nice conversation about who I was and what was going on. And, we connected again later on, and he ended up offering me a job. But my journey into finance, it wasn't a traditional one. This wasn't my
dental hygiene, and then wow.
Yeah, it just worked out that way. And, I didn't know that was the job I was going to take after school either. So I'm sure a lot of the people here can relate to this. My mom, she encouraged me to pursue medicine. That's, I think, every immigrant parent's dream, probably. And I love sciences. I still do love sciences. I go to sleep reading science journals at night. So I love sciences, but I want that responsibility, saving people's lives. That wasn't something I wanted for myself. And I had a strong entrepreneurial drive. So I knew I didn't want to invest all those hours, those years into a career I didn't want to stay in long term. So I compromised. I made my mom happy. I did dental hygiene. And then after a few years, I left the dental world to start my own business. And then through that venture, an interest in finance and markets was ignited. So I wanted to better understand just how money influenced the world around us. And I sold my business. I enrolled in the Masters of Finance program. And while I was in that program, I explored opportunities in asset management first and wealth management, and then the commercial banking opportunity that was presented to me. And given my previous business experience, I felt commercial banking would be an ideal starting point for my career in finance. So here I am today, working on the real estate and construction team here in Winnipeg.
Amazing. Very cool. Thanks.
A lot shorter than Rob's, but...
I'm much older.
You're a different cat altogether. So what's your story?
Well, I'm coming to you live from Regina, Saskatchewan, where we just had a big provincial election a couple of days ago. But my name's Nevin Markwart. I'm a CFA, a CFP. I grew up in Regina. I have always been a very curious and very competitive person. And I think that those are two really necessary attributes in the investment industry. I think in many vocations and domains as well, but I think especially in the investment industry. But I grew up here in 1977. There was a movie called Smokey and the Bandit. So I know that no one on this call other than the panelists will potentially know what that is, but it made me very curious about electronics. And so I kind of became what was back in those days called a citizens band radio.
Oh my God.
I kind of became a guru. I could dumpster dive at places called Radio Shack, and because I had no money, right? So, I figured out how to essentially make radios and talk to people in Ecuador. And, that was super fun. And then, I also at nighttime would go out because we had a street light right in front of my house. And it gets very dark here in Saskatchewan during the fall and winter. And I would play shinny with all of the other kids on the street. That was kind of any street you went down, you saw little kids playing hockey. Whether they're girls, boys, didn't matter. And that ultimately ended up having me play for our local junior team called the Regina Pats. And in 1983, I was the Boston Bruins' first pick in the NHL draft, and I was fortunate enough to make the team right out of the draft. And so I started playing in Boston when I was 18, and I stayed there for 9 years. I had some shoulder problems. I had some operations that I had to take. And so I retired at the age of 27, and I got the break of a lifetime. I got into Northeastern University's MBA program without an undergrad. And so I spent 2 years at Northeastern. I got an MBA in finance. I graduated number 4 out of, I think there were 440 students in my cohort that year. And I went off into the investment industry in Boston, and I was very fortunate that over the next 15 or 20 years, I got to the very top of that industry. So I started off as an equity analyst. My first fund was a $300 million long short market equity market neutral fund, pardon me. And so I was learning how to short stocks and invest in companies that had great growth prospects all at the same time. And so, it was a wonderful start to my career. I think my 8th day on the job, I was managing $100 million. And I have to admit to you, I don't really know that I knew what I was doing, but the important thing,
the best way.
I thought I did. Okay. And I also had a very strong structure within the organization. So there were guardrails in place for me. And ultimately, later in my career, I was creating those guardrails for others. So started off as an equity analyst, became a portfolio manager, became director of research, ultimately became a partner of my first firm. That firm was sold to a bank. And, in the industry in the States, bank is a 4-letter word. And so you kind of stay away from the banks. So I decided not to go on with that initial firm of mine, where my very first mentor came from. And again, I'll talk about mentorship as we talk today. But I ultimately ended up going to a place called Wellington Management and overseeing a little over $100 billion US in assets for clients all over the world. And then I went to Fidelity Investments and ran Canada for Fidelity for about 4 years. And then the 2009 sort of world financial crisis took place.
Yeah.
I exited Fidelity, ended up starting a mutual fund company in Calgary with an energy billionaire. Some of you may know the company is called Canoe Financial. And so I stayed at Canoe for about 5 years. And then I decided actually to kind of exit the industry. And so I went back to school and got a master's degree in cybersecurity from Brown. And I've been quite involved in technology. But with that said, I'm on the Saskatchewan CFA Society Board of Directors. I'm involved in a number of venture funds. And so, I still am spending quite a bit of time in the investment realm, even though it's not necessarily my formal career. So it's been a wonderful time, going through these different industries as my career has progressed. But I'm really looking forward to talking a little bit about some of the secrets of how to break into the industry and maybe a couple of tips here and there with regards to how to think about the interview process.
Holy moly. Like, I've known Rob for years, Sheena for a while. We just met Nevin. That was amazing. That's like, so let's start with, let's stick with you. And what is your advice or tips? Like, okay, playing the NHL, that helps maybe, or what for people that are coming out of school, what's your, and you mentioned curious as well, like anything that people should really keep in mind when they're looking for jobs.
Sure.
Rob said persistence. You'll probably say that a few times, but I know I do.
Here's what I would say. I would say this, that it's really hard. Okay. Yeah. Like, it's hard to break in. So don't think that it's easy, but I will tell you that it's very rewarding. And so the return on investment that you'll get on working really hard early to break into the industry, it will pay you in hundreds and thousands of percent. Later on in your life. So just kind of think of it as an investment. You're investing in your school and you're investing in those initial searches. There's a little bit of luck involved. I think there's luck involved everywhere in life. But here's the things that I'm looking for when I'm hiring. And I've made very few hiring mistakes. Like, literally in 25 years of hiring investors to be analysts or PMs or et cetera, I think I can count on less than 5 fingers how many hiring mistakes that I've made. So my criteria is something like this. Number 1, do you care? So I want to, at the end of that interview, I want you to come across to me that you care. So what do I mean by that? Talk about outcomes for clients. Ultimately, that's all we do. We produce outcomes for clients. Wellington Management had a bunch of really, really interesting sort of phrases that, drove our employees and drove our culture. And one of the ones that I liked the most was the hierarchy of your activities and your thinking every day on the job. And that hierarchy at Wellington Management was client, firm, self. And if you were willing to think of your job from the perspective first of the client, next of the firm, and the next of yourself, the idea was that the benefits would accrue to you over time. They may not come in perfect proportion to your value added in a given month or year or decade, but as you looked back over time, you would say, wow, I was really well rewarded for thinking about the world from a client firm self perspective. So again, do you care? In today's world, I have a 24-year-old daughter that's working in the business consulting industry in Boston. And I say to Michaela, my daughter, all the time, okay, go to the office, okay? I get it. The culture may be not to do that, and that's perfectly fine. But the learning opportunities in the office are immense. And more of the gray-haired people will probably be in the office more often than the younger people in today's world. And I love the idea that my daughter may have a monopoly on those insightful people. So demonstrate that you care. Number 2 is skills. And so, in the skill realm, I'll give you a question that I was asked in my first job. So I probably interviewed with 12, 15 firms in Boston, all solid no's. No, we're not interested in you. We're not interested in you. We're not. We'd really like to hear a bunch about Ray Bork. We'd like to hear a lot about Ray Bork, but we really don't want to hear a lot about you, the investment guy. And so I ended up at the firm that I ended up getting hired to, and I ended up with the equity trader. And he looked at my resume, and my resume had something to do with derivatives on it. And so this fellow looked at me, and he said, okay, Nevin, just before we conclude this interview, can you tell me what the delta of an at the call option is 1 second before expiration? Okay. And I knew that the delta was a range of 0 to 1, and I said 0.5, and I was right, but it was a guess. Okay, so that's why I said you got to have a little luck. So I put some skill together because I knew the range of what delta of a.
That wasn't going to be 3, that's for sure. That's kurtosis, yeah.
Exactly. So again, I think you have to demonstrate you care. You have to demonstrate some skills. And the third thing that I have found it really resonates for me as the interviewer is demand that you have mentorship. So, you're there looking for a job and, you're saying yes to whatever someone will say. But I do think that there's a point in an interview where the interviewee has to make some demands. And again, the demand is mentorship, because my return on investment from a mentorship perspective is infinite. I've had 3 mentors that were the best in the world. All I had to do was copy them. I didn't have to invent one darn thing. And that allowed me to essentially zoom to the top of the industry. So those are the things that I'm looking for. And, maybe I'll hand it over to the other panelists. I've got a little bit of advice with regards to the interview, but, why don't we pass things along a little bit?
That's cool. I love it. God gave you eyes, played your eyes. Yeah, you got a little bit of luck. So Sheena, what are your demands, or what's your advice?
So one of my advice pieces was also the mentorship component that Nevin spoke about. So when I was in my master's program, I was officially paired with a mentor, and her story is a really great example of a corporate leadership path. During that mentorship process, I ended up meeting one of the largest portfolio managers in the bank's asset management team. And over the course of dinner, we got to know each other a little bit, and she ended up offering to informally mentor me as well. So now I had 2 wonderful mentors, both at the top of their game within the bank. And between the 2 of them, they were both able to introduce me to a wide range of partners, internal, external, different roles. I learned so much about, the financial industry, alternative investments, what different roles looked like, what would be good fits for me. With all of their advice, I felt really confident about my decision to join commercial banking on the real estate team after grad. Another thing that I would recommend is work on your self-awareness. I truly believe that self-awareness is going to take you very far. When I first began my finance program, I didn't know what I didn't know, right? I was completely new to finance. I had a little business experience, but I didn't know anything. But I knew myself. That is the one thing I really knew well. And I was a prior point guard at the University of Manitoba, played basketball. And when I had good knees, I no longer have the good knees, but I still have the heart of an athlete. And I knew I could lead because point guards lead. And I knew I was very competitive. I hate losing. I will do anything I can to not lose. So I knew that about myself. I knew that I loved to help others and that I was a service provider by nature. And I knew I liked to problem solve. I was really curious and that I worked well within team environments. So I suggest that when you're job searching, when you're looking for, a good job, make sure that job is good for you, that it's a fit for you and that it matches your strengths. That's my best advice for students.
I stick with you and Nevin for a bit, like with mentorship. Like, how structured is it? You said informal and maybe formal mentors. Does it have to be like, is it once a month or just as you like it? Or because I talk to a lot of folks too, but it's mostly they do a few and then they kind of like, oh, they go. But how long do these kind of engagements last? Let me start with you, Sheena, and then Nevin. I know you're kind of on the other side there.
So my formal mentorship, they give you a structure of once a month for 6 months. And I think it's just with anything, it's what you put into it. You're going to get what you put into it. So if you really make an effort to relate to your mentor and they find satisfaction in mentoring you, if you're taking their guidance under advisement, you're really implementing and executing. And I think I draw a lot of parallels with my athletic background. As a coach, I also coached after I retired from my career. I continue still to this day to talk to and go to weddings of the athletes that I coached and watching them develop as human beings on top of, their athletic careers and professional careers even. So it's what you put into it, right? So with a formal mentorship, we still continue to have discussions. She's also with RBC. So that ended up being nice that I had a job offer with RBC prior to our mentorship. Of course, she kind of nudged me towards staying within her corporation, but I still keep in touch with her to this day. And the informal mentorship, we didn't have set agreements to meet, but we continued to email. I kept her updated on what was going on. I wasn't afraid to reach out to her. When she agreed to informally mentor me, I said, okay, hey, you agreed to this. I'm going to keep sending you questions. I'm going to keep sending you feedback.
And you do it, right? You ask them the questions versus them trying to figure out what's in your
Absolutely. I took the initiative, and I think that's really important. One of the panelists mentioned, show me that you care. I cared. I cared very deeply about where I would end up and where I would be a fit. It wasn't just about, my questions weren't just about what can I get from you? It was, where will I be a good fit? How can I help? Where do I fit into this arena? Where can I be useful? Where can I bring value? What value can I add? So for me, that's how the mentorship worked. And even now that I'm in role and I'm not in asset management, I still reach out to the portfolio manager on a regular basis. I ask her for her advice on, how do I approach these referrals? How do I gain new business? How do I approach, situations with, the soft skills? So I still keep in touch and reach out to her regularly. So
how about your side, Nevin?
Yep. So my experience with mentorship, my first mentor, his approach was he would stick his head in my door of my office every day for about 12 seconds. And he would say, Nevin, what are you working on? And I would tell him, I'm reviewing McDonald's third quarter report results. And he would say, well, take a good look at the French fry and the beverage sales. And he would shut the door. And he did that every day for 8 years. I don't think I ever had a meeting with him that was over 3 minutes because he actually had an egg timer that he would flip. And when the sand ran through that hourglass, I had to leave. So I only got 3 minutes with him at a time. So I found that small mid-course corrections, many, many times in a week or in a month or in a quarter or a year, can lead to tremendous acceleration and advancement. And so I took that model and I used it for 15 years. And so I really think that, formal meetings and monthlies and things like that, terrific. But, if you can just touch someone for a very brief, high value added period of time, I found that was very, very valuable to me. And again, my daughter in Boston, every time she's interviewed for a job, she's demanded mentorship. In fact, she will explicitly say that if your mentorship model isn't acceptable, I won't work for you. So,
wow, like 2,000 hours, 2,000 times, 3 minutes. Like he basically spent 100 hours with you. That's it over those 8 years. Amazing.
Interesting.
How about your side, Rob? What's your advice? And if you have any mentorship stories as well.
Yeah, probably. My main advice would be something that you kind of predicted earlier, James. Persistence and don't give up. And the reason I say that is, and in addition to that, I'd say that you kind of have to balance, the initial thought of that first job with, of being somewhat selective, but as well get your foot in the door somewhere and build from there. It may not be your dream job, but it's much easier once you're in somewhere, one, to prove your skill set within a company and advance within, that business, or to find other jobs, at other companies. It's much easier once you have that foot in the door. So, you kind of have to figure out, where on the spectrum you are there. I think you need to network well. I came from a family that was not involved in, the financial world whatsoever. I had zero network. I knew not one person. That's definitely changed over the last 30 plus years. Utilize your family, your friends, your friends of your family. Network anywhere you can. Get outside your house. The world is not going to come to you. Just because you get a degree doesn't mean people are all of a sudden going to be sending you job offers. So it takes a bit of work, and you really have to get out there and prove your point. Don't take someone not responding to you when you send them an email about a job personally. People are busy. I probably get somewhere to the tune of 200 to 300 emails a day, LinkedIn messages, WhatsApp messages, text messages, and I can't read them all. Keep trying, follow up. I love people that have somewhat persistence, and follow up multiple times. They might catch me just at a good time when, maybe we're looking for someone, or something piques me that is of interest, and I'm willing to give you, a shot at pitching me. Don't assume they're not interested. It's just, sometimes the timing might not be, or they're just very busy. I got two other points here. One's a story, and one's, just something that I really think people need to take professionally. I do a lot of presentations across the country, as I know, James, you do, things like that. Practice your pitch. If you're going to work with people, I think you really need to professionalize your elevator pitch on who is you? What are you looking for? What do you want to do? If your response is, well, I haven't really figured it out. I don't know. Well, that's not going to lead you anywhere. You kind of have to be passionate about something, even if you don't fully know. There could be areas of interest. This is what I'm looking to get into, looking for advice on, various things like that. Like, you have to show energy, and you need to practice your pitch, not just your elevator pitch, but what passions you have, why you think you could be successful in whatever role it is, in this financial business, that sort of thing. I practice before I go on the road and have a presentation to do. I practice quite a bit. I make notes. You want to make sure that half an hour, 40 minutes, 15 minutes, 5 minutes, hour and a half, is utilized to the maximum amount of value of the time. And maybe a story on persistence is, outside of my own, which I gave you a little bit of prior, but someone that's quite successful in the financial business that both you and I know quite well, James. I'll see if you can pick out who he
Okay.
is well after the story. So when we started our first hedge fund company called Bluemont Capital, very early days, very limited budget. You know, we were kind of on fumes, and you know, but we had this.
You can say this now, yeah.
We had this guy that had reached out to both myself and our president at the time, my partner Tori Stewart, and something like 20 to 25 days in a row, saying, "Listen, I came out of school. I'm cold calling for this advisor in the industry. I really love what you guys are doing." And at the time, we were like one of the first hedge fund alternative companies in Canada to kind of mass sell those type of products. Loved what we were doing, wanted an interview. And he literally reached out to us after, like, I think 3 weeks straight. We finally said, okay, let's get this kid here and see what he's got. And, you know, he's willing to work for free. We ended up hiring him. We held him to his word as far as his ability to work for free. I think we allowed him to work for free for a week or two. He proved quite valuable to the firm, and he worked with us for many, many years. Now as a managing director at Richter Family Office. So that probably gives it away.
Okay, now I know exactly. Yeah, I was thinking Youngblood or Patterson, but yeah, it's definitely.
But not much of a different story from those guys. So it's you know, a little persistence that got his foot in the door. He's a super bright person. Not like he didn't have a skills and brains and persistence to succeed. It's just, you know, he needed to get that first foot in the door, and was invaluable to our business. He worked with us for 12, 13 years or so, and you know, it's you know, he's very successful somewhere else and a very good friend of mine. So
he went to Calgary for years and working with you guys, and so okay.
Yeah.
Throw you to this other city. Okay, sure. Yeah, let's go. Yeah.
And he started out as a junior analyst with us. So for free initially.
Yeah. Amazing. So how about now you've seen a lot of stuff. Maybe we'll stick with Rob for it and we'll go down to so where do you see growth? Because you've started 3 businesses, and obviously alternatives are where you're going to be, but maybe what area. But like what's the
I'm typically biased. So anywhere where we see I'm typically somewhat biased. So anywhere we see, you know, we think we see a lot of growth, and listen, we make a ton of mistakes. Don't get me wrong. And you know, we'll definitely admit it. But you know, typically if we see an area of immense growth, we'll typically get involved in that business as well. It's just how we do things historically. But you know, we've definitely picked out one area of growth, which I think continues to have a lot of legs in the financial business, which is in private lending. I think that's definitely a growth area. We got involved in it 10 years ago, and you know, are getting vastly more active in that space, raising money now globally and doing, you know, lending, you know, throughout North America. They're always looking for good people, and there's a lot of people, you know, that continues to grow. We like the fractionalization business of real world assets. And for people that maybe don't know what that means, is, you know, creating investable areas on assets that maybe might have been difficult to invest in before. You know, we're actively looking at at a fractionalization company that's fractionalizing collector cars and setting up potentially an asset management firm alongside of that with them. Sports teams, you know, which have been, you know, no one has $1 billion typically sitting around to get involved in the growth and the asset appreciation that's happened within various sporting teams, from traditional to auto racing to whatever. Getting involved in that and fractionalizing it so people can maybe invest for as small as $500 and stuff like that, we think is kind of interesting. It's been very successfully done in the art world. There's a UK-based firm that's done it, and has raised over $1.1 billion by just, you know, giving people access to invest in art on a bite-sized piece. So we definitely like that. You know, I think the financing for smaller businesses is kind of, I love the business, but it's bit fallen on tougher times. So I'm kind of contrary in there.
Okay.
I don't think there's a ton of money been flying around there lately, but it's really the lifeblood of the business, the economy, and the future growth of, our country and economy. So I think it's always an area that will probably come back in favor. So I'll leave it at that.
Wow. How about you, Nevin? Cybersecurity, that's the place to be, right?
So I guess I would just follow on to what Rob said. And I think if I put, those pieces that, Rob discussed, these are non-traditional investment areas. And so, if you want to work for a company that sells Canadian balanced funds, Canadian stocks, Canadian bonds, Canadian cash, my guess is that, there's probably not going to be a lot of market uptake for your company. You're competing against the 5 banks and their distribution. So that's going to be pretty difficult to be an entrepreneur. So you probably need to work inside of the bank to do, to be in that area. And the fees are going to be very, very low. And if the fees are low, it's hard ultimately at the end of the sausage for you to be compensated. So I think you're looking for these specialty areas of investing. And again, I think Rob went through a number of very interesting ones. The other thing I would say is that it's on the service side. So with regards to things like taxation, that's a really important driver of ROI for investors. Taxes matter. And, while, again, Saskatchewan just went through a provincial election 2 days ago, and, the incumbent 17-year government in the last 3 weeks just started giving away all kinds of stuff. Well, we're going to give you this and we're going to give you that. And it's kind of like, wait a minute, over the last 17 years, didn't you think we needed that stuff back then? Like, why all of a sudden the last 3 weeks is it? And they, every once in a while they talk about, oh, we're going to you don't have to pay this tax and you don't have to pay that tax. I believe that taxes are going up for the rest of time. So, so again, in the investment return, tax is a big piece. So if you can get into the industry with regards to tax advice and things around tax for organizations, I think that there are huge opportunities there as well. Obviously, from an employment standpoint, we want to try to stay away from the AI industries that could really, I look at like the big law firms in Toronto that, over the years, I've probably spent $10 million on, $300,000 prospectuses, right? And, the thing is every time I look at a prospectus, it looks the same as the last one I had,
Yeah.
but it costs
It's very different though. It's very different.
So, I'm guessing that someone's going to innovate and come up with a $29,000 prospectus, and he or her are going to dislocate that industry. But here's the last thing I would say. The greatest industry in the world is the one where your product is money. Okay, money scales infinitely. Okay, there's so much scale. The first time I sat at Wellington Management, we were around a conference room with a Polycom, and there was a big institutional client in Chicago, and the discussion was about a $500 million mandate. Now, I had just come from a firm where a $10 million account was a really big account. And so, just imagine I'm sitting around this table and there's 12 of us and we're talking about fees with this pension plan client. And we're talking about a $500 million mandate, and we just couldn't get to a meeting of the mind of the fees. And so the client on the end kind of paused for a second and said, okay, let's increase the mandate to 1 billion. Okay, what kind of fee schedule can we talk about now? And again, like I just sort of sat there and said, wow, that just is an amazing shift in 12 seconds that all of a sudden we're talking about $1 billion. But again, money scales infinitely. You just add a couple zeros at the end and it's just a different number. Okay, it's got one extra comma. Now we use even more than 3 commas kind of thing. And the word trillion is becoming a pretty common base for numbers that you hear people talk about in finance and in government. So this is a wonderful industry. You can be as curious as you want and you'll never figure it all out. and it can be very, very, very rewarding from a monetary perspective. So, again, I think, I commend the 37 participants that are on the line here today. This is a great area, and, I wish you a lot of luck.
Nope. Okay. Yeah, thanks. Okay, Sheena, you're at the big bank. You're, eating lunch with everybody, obviously, according to Nevin. So where do you see growth? Whether it might be inside the bank, or let's say your manager isn't watching, maybe it's outside the bank. What do you think the next thing is?
So, I mean, just being part of the real estate team, I'm going to be a little bit biased towards that part here in this discussion. So, I mean, if we're looking at like industrial properties that are focused on e-commerce, I see growth there. Infrastructure and renewable energies, essential services investments. And touching on Rob when he was speaking about the sports, I would highly recommend women's sports. Once again, probably a little bit biased there, but I see so much
So
growth
undervalued.
potential.
Yeah.
I see a lot of growth potential there. I know Nevin was talking about kind of staying away from the AIs, but I was just recently in San Francisco and toured a few different startup offices. I love what I'm seeing with the biotech stuff, especially protein therapeutics, which I think AI is just going to speed up that process instead of what used to be the focus in genetics, really looking at the protein therapeutics and how AI can much more quickly reconfigure protein therapeutics. So I'm not going to get too nerdy into that with that kind of stuff, but yeah, I'm not as experienced as Nevin or Rob, of course, but that's where I'm seeing some growth potential.
And how about like you have your MBA and such, like accreditations, CFA, CAIA, like how do those fall into it? Like you've probably been busy doing that the last few years. You're in the thick of that too.
Yeah, I'm studying for level 2 right now for CFA. I don't have my MBA. I have my master's in finance, so a little bit different. I don't have all that marketing stuff or the leadership courses. Yeah, so I mean, in commercial banking, I wouldn't say there's any accreditations that are the most important, but what we commonly see are the CFA PAs and, finance and BCom degrees. That's what's most common here in commercial banking.
How about you, Nevin? You seem a bit of a free thinker with all the stuff you're doing. Is there anything that you would like to see in a resume?
So again, as I'm trying to assess whether you care, I'm looking for commitment. And so if you have a CFA, I know how hard it is to get a CFA. My first job in Boston, I was sitting at my desk and a lady came in and she put 2 applications on my desk. One was a healthcare application, United States, your healthcare comes through your company. And the second application was for the CFA program. And I didn't know what that was. I was like, what's this thing? And the lady just said, just fill it out. Okay. And, we were a firm, we managed 50 billion. Again, we were bought by Mellon later on in my career. Bank of New York Mellon. And so, I didn't even know what the CFA was. We had 150 employees. We had 120 CFAs amongst 150. We had receptionists that had CFA accreditations. So I look at the CFA, and to me, it means you're committed to the industry because it is a very, very difficult process to go through. But the real reason why I think the CFA is so important is because of the ethics component to it. The most important thing that you do in the investment industry is elicit confidence of your client. Okay, if you don't have the confidence of your client, then you won't have that client. And unless, again, going back to that hierarchy of sort of needs at Wellington, client firm self. You just cannot do things that put you ahead of your client. And, the legal word is fiduciary. And so I really, really appreciate people that go down the CFA path because I think they have the opportunity to be the best fiduciaries. Other people can as well, but I think they have an opportunity because they've demonstrated, with blood, sweat, and tears, getting that very, very difficult accreditation. in some instances, I've seen, a culture against the CFA or against going back and getting an MBA because, now young people can make crazy amounts of money in year 4 of their career. Like, when I was running Fidelity, the business at Fidelity back, a decade and a half ago, like I had 2 employees that made $8 million a year very regularly. And so, as you go down the food chain of the 25 analysts and PMs I had, I would try to mentor to, go back to school and get an MBA. And a lot of my young people would look at me and say, I'm not going to forego 2 years of comp. I don't want to do that. I'm learning more here than I think I would in an MBA program. And again, all to their own. But I do believe that, in my view, the generic advice is to get an MBA. A master's degree in finance is very close. Like I would almost call those the same. You're right. There's a little bit more breadth in the MBA. But understanding the numbers is one of the key core competencies that you have to have in the investment industry. And so again, I find that important. But the CFA, in the environment I grew up in Boston, the CFA is a union card. Okay, and if you want to be in the union, you have to have a CFA. And there were thousands of them, in the domain that I worked in early in my career. And I still, again, I'm on the board of directors of the Saskatchewan CFA Society, so I obviously am a strong supporter of the CFA.
Yeah. Love it. Yeah, and people probably don't know in Canada, if you don't have, like, there's a CIM you could have as well, but if you have your CFA level 1, if you don't have that, one of those, you're not running discretionary money. And if you don't have the full thing, you're going toward it, people just kind of go, are you serious about this job? Like, what are you doing here? Rob, anything about designations and such?
Yeah, so, for me, I'd probably say that what's been most valuable for, what I've been doing for the past 2 decades is, taking the CAIA or the Chartered Alternative Investment Analyst back in, I think it was 2002, 2003. I think I was one of the first actually in Canada to take that.
I did like an 06, man. You kill me.
And in order to be, respected on building a business that was relatively new in Canada, you have to be an educator. So that kind of allowed me to get some credibility to go and speak across the country to people and educate people on alternatives in general. So I think that was the most valuable for my career, but it's very focused on alts and building alts. On a day-to-day basis, whether these people are internal or whether they're people we're doing business with external, various different, roles require various different accreditations. Nevin, I think we beat you on the legal spend maybe, but it's over the last 20 plus years. But
that's a false economy.
Not a day or two goes by where I'm not involved with either, our 2 in-house lawyers on the lending side or external lawyers through various different structures we're launching or products we're launching on the fund side, or whether it's perfecting security on lending, money to businesses. So, law degree, is very important for people we deal with. My typical client across the country, we typically raise money from retail advisors, of which the biggest ones have become mostly discretionary now. A lot of them have their CFAs or MBAs or both. So I think that's fairly important. We have a finance team. We deal with a lot of people in the lending business, that might be, running finance teams, and they're typically, CAs. So it's, each degree I think has a purpose, and I agree with you, Nevin, a respect level as far as, capacity to learn and stuff like that for what you're doing. On the flip side, I've seen, a number of people be very successful without any of them. So, you can't say there is no way to be successful without that in the business. But, that's, a few comments anyways, James.
Cool, thanks. I had some Q&A here, but I'm not sure how to get it on my screen. Sec here. I thought I had some... as I figure this out, what do you think about social media? I mean, you're pretty active on there, as I am too. Rob, do you think people should whether their own branding, which may not even people think they need to have, but also reaching out to people on LinkedIn, or should they get you if you're on Facebook or Instagram? Where are you there?
Yeah, so I'll maybe give some disclosure that I don't always run my own LinkedIn profile or Twitter profile. So it's my marketing team that aids in that to some degree, but I am fairly somewhat active in it. I think as far as people online looking for a job, and even trying to figure out what jobs are out there that might be of interest for you, I think LinkedIn is the key business platform. Start networking, start trying to follow some people that you think have some interest there, see what they're posting, see some of the people that are commenting on it from the industry, and see where they are working at. Follow James, see who's making comments,
see a lot of videos, buddy,
or mine, see what companies they're working for, look them up. You probably don't even know that probably 90% of these companies even exist there, but some of them might be doing some really interesting things and could be like a really good entry career path, towards yourselves. So I use LinkedIn. I follow, a fair bit of people that I know. I say I know everyone perfectly on my LinkedIn, but most. On Twitter or X, I try to follow people that I think I have some respect, and hopefully they're posting stuff of interest. So I use it more as an information source to some degree. I caution people, I've got two daughters, 19 and 21, and it irks me sometimes when, they tell me they heard of this and heard of that. And I go, where'd you find out about that? And I go, on TikTok. And it's like, it's very, in the 30 plus years that I've been in this business, we've gone from a stage where access to information was very hard to get or very limited, and you had to really work at finding any sources of information on some things, to now where information's everywhere, but you don't want to waste your time on looking at information that's not reputable. So that would be my only comments there. So
cool. Oh, Sheena, you seem to be in the thick of it. Just making
an
ageism comment there, but yeah.
Rob makes all the great points. I think I only have one thing to add to that is, as someone who just recently graduated and had to go through, navigate that field of, an entry-level job or how you're going to land, I think you have to remember that you're competing against everyone else with the same degrees. Everyone else is, that's applying for that job. They're getting their CFA too. They have their master's, or they're getting their master's. They have the same finance or BCom degree as you. So use your LinkedIn to showcase, what you're passionate about. What experience do you have that is going to contribute to the person who's showing up at work, right? What makes you unique? Try to make those posts and curate those posts to really showcase what makes you different, and why should anybody care about you versus the next guy, So that's just the only thing I can add, because I think Rob did a phenomenal job in how to use LinkedIn. I should be better actually at using LinkedIn. I was going to bed last night thinking about my schedule for today, and I was like, oh no, I didn't make a LinkedIn post about this event.
What?
I didn't
How
even
dare you?
But I did it. I got up and I said, oh, I forgot to do it. So I got up and I reposted your post, James, and added my 2 cents in there, just saying I was excited because it was what I was thinking about, at midnight last night. So I hope others are better than me with that and maybe get a little bit of a head start with that. But yeah.
Yeah, I think Rob's handlers will know too. You can also schedule those, so you can have it go out a few days later, or like I have it when I came here. Like I had a thing saying, "Hey, I'm going to Chicago. I'm going to this CAIA event. If anybody's in town, ding!" And I had it automatically go out like 5 days before. And I just had a guy actually just text me here. He's like, "Oh, you're in Chicago right now?" Like it doesn't go up immediately like X does, but you get people that are pinging you. How about you, Nevin? Anything from Regina?
Sure.
The center of social media.
Yep. So I'm going to integrate social media at the beginning and the end of what I'm going to call the interview process. So the front end of the interview process, you better be going to LinkedIn and looking up everyone you're going to meet with at that firm. you want to go to the firm's website and you want to find words that look like they are that company's words. Some companies have little phrases, and you want to know what their phrases are, and you want to use their phrases. You want to answer their questions with some of their words. It will warm them up. Okay, their brain will go, this is a good person, because they're talking my language. And again, you don't highlight you're doing it. You make it feel very natural, but you want to use the other side's words. And the only way you're going to get that is to get to LinkedIn, know who you're talking to on the other side. Don't explore, hey, tell me about yourself. You already know who they are, okay? And you know their firms. So I'm going to call that sort of the social media component of the interview process. The next thing I would say from an investment perspective is dig into one industry. Know an industry well. Fast food restaurants, I talked about McDonald's, okay? Dig into an industry, whether it's sports franchises, but know one industry quite well. It should almost be a hobby. If you're really interested in the investment industry, you're probably going to be interested in all kinds of companies, whether they're airlines or biotech companies or finance, insurance companies, et cetera. But early in your career, you won't have analyzed 2,000 or 3,000 companies like I have. And so, but you can know 5 or 6 companies really well. And early in your career, that will be appreciated. Next, it's what Rob talked about with regards to network. Okay, network is really, really important. And so again, as you're learning about the company, I've seen, Rob and James have gone back and forth with acquaintances that they know. They didn't think those acquaintances were going to come up on this call, but when you know someone that someone else knows, guess what? There's another warm feeling that takes place. It's kind of like, hey, Jim? Oh yeah, Jim's a great guy. Or Sally. Sally's a great girl. On and on. So again, that's really important. And then on the last part of the interview process, I'm going to talk about LinkedIn again, and I'm going to talk about the LinkedIn profile. Okay, you have to have an excellent LinkedIn profile. Okay, Rob talked about presenting. Okay. I was mentored that a presentation has 2 pieces to it. Okay, there's the golf match, and there's the tennis match in every presentation that you give. Okay, the golf part of a presentation is the one that you're presenting to the outside world. It's like a golf ball sitting on a tee. You really should hit it right straight down the fairway every time. You get to wiggle your butt. You get to swing at the club to the ball whenever you want. You don't have to do it at a certain time. You can do it when you're good and comfortable, and therefore the ball should really go right down the middle when you make your presentation. The other part of the presentation is the Q&A, and that's what we call the tennis match. Okay, my daughter was an NCAA tennis player in Boston. And tennis players have to get to the ball at the right time, at the right place, and they have to swing at the ball at exactly the right time, or the ball won't land in on the other side. Okay? It's way harder to play the tennis game than it is to play the golf game. And so again, your preparation for an interview is, what are the frequently asked questions? I need to have solid 20, 25-second answers to these things. It's almost like hitting a tape recorder. It's the same with your LinkedIn profile. It's another element of the golf game. Okay, you can present to the world in a very, terrible manner, or you can do it in a very nice manner. And so look at other people's LinkedIn profiles and see the different tricks. Like there could be a new product feature that LinkedIn comes in with that you didn't even know they had. And by looking at other people's profiles, you might say, hey, I'm going to integrate that into my profile. Because ultimately, the interviewer is going to do the same thing as you are. They're going to go to your LinkedIn profile 100% of the time. So how do you want to present yourself the very first time? It won't be in person. It'll be on LinkedIn. And so again, I don't own any shares in LinkedIn. I'm not an endorser at all.
Here's a CFA disclaimer. Yeah.
but I believe it's a really important tool for your career.
Yeah, I think too. I had there's a gal who I saw her LinkedIn and I said, holy moly. So I had to I sent her the link to her boss and I said, don't say this about to her, but she had a picture basically was taken in the bathroom and you could tell it was like, oh my God, this should not be in a professional thing. And I said, maybe just do an APB to everybody. I say, hey, let's make sure everybody has professional pictures on their LinkedIn. But yeah, you gotta, having something where someone's arm is over your shoulder or something. It doesn't take a lot. Like there's lots of great cameras on phones now, or you get someone to do it and you have a good background and then you can have a nice looking picture. It doesn't have to be a total glam thing or something like that, although there are filters. But you should look like your actual person. And yeah, so that kind of stuff and having it match your resume because people will just match your resume to the LinkedIn and go, hold it, what's this here? What's it, something different? And they may see that as a red flag that you've got something on one place and not the other. But yeah, like LinkedIn use it a fair bit. So the questions that we had here, one was actually to Sheena. How do you manage to switch from biological sciences to get an MBA, your master's in finance? You think you went into that kind of, but that is a pretty radical swing. You just wanted to go into business and figure out money, and this was the way to do it, or is there something more to that?
Yeah, so my business was a healthcare business.
Oh, okay. So you had,
yeah, so that was it was the bridge between being a healthcare provider, running my own healthcare business and clinic, and then how is this money working? It's, it's the bloodline, it's the blood flow and what's going on after. So, yeah, that's how I ended up in finance.
Yeah.
Pardon me?
Cash flow is king, but if you don't know taxes and all these other things, then you're not going to be able to.
Yeah, exactly. So I realized how important it was as a business owner, and I wanted to learn more about it. So I started paying more attention, researching about it, reading about it. And I started, analyzing other businesses and their finances. And I realized I have to really learn this, properly, fully. And I looked at, just studying on my own for doing a CFA. And I realized, hey, I can do a master's of finance. I can, I do a master's of finance. They're going to prepare me really well to get started on the CFA journey and becoming a better analyst financially, whether it's for, a professional job or for my own personal finances. That's how I got here. So.
Love it. And how about maybe all three, someone who's advanced in a career and wants to transition into finance and investment role. Like how can someone transition, like just basically switch paths kind of midstream here? You see it happen, obviously, people going from lots of different areas that go into finance, but maybe any stories that you've had? Like, I don't know if there's an actual way to do that, but any advice that you have other than take your master's in finance, or maybe Rob, someone you've hired that they started off like not even close to finance and then they were rock stars with you. I don't know, like
we've hired a lot of people that don't have a finance degree. It depends on the role. Obviously, within our finance team, it's that they have their CAs and stuff. But it's we've hired many people without finance degrees. Some that have come from other spaces. Sometimes it's more focused on development and sales initially, but I know on the asset management side, on the lending side of the business, part of our team, it's a combination of bringing in some people with a lot of experience, but then the bias is to, a lot of people, we also like training our own people to give them the knowledge and skill set that fit our lending box. So, sometimes picking up someone from another lending firm that has been trained a different way that doesn't fit our style, doesn't really work. So it's a combination of, sometimes picking up people with experience in that background, and sometimes on our lending side, picking people like Green, but with a real capacity to learn and getting trained and mentored from that exact team, whether it be underwriting, risk monitoring, account management, stuff like that. Exactly kind of our way of doing it, as opposed to, what they've been maybe learned from other firms.
I guess what I would add to that is if you have had a, 7 to 15 year career in a domain outside of finance, you may be very, very valuable as a industry or sector analyst, because you've been in the domain. You don't necessarily need to have had an MBA or whatever. You're going to understand, like if you're coming from, the fertilizer industry, and you understand the global fertilizer industry because you were, a senior vice president at, at Nutrien. And, there are hedge fund managers that will build very specific investment products that may just be a long short fertilizer company product. And so, those domain area experts, to be quite frank, I'm on the outlook for them all the time. Okay. I love having friends that really understand, for instance, the insurance domain and how the insurance domain works. And again, the insurance domain has a lot of sub segments inside of it as well. But domain area experts, they're very, very valuable. And so, if someone was looking to make a career shift and, they know a lot about a certain industry, I think there are a lot of avenues for that kind of talent.
Very cool. Getting there. Let me see if there's any other questions. No. Okay, well, let's go to, this is our fun part, the bonus question. Let's hear something about you that we haven't heard yet. So we've had folks say, I had this once, I did this in Geneva, and I said, referring back to a Vancouver session that I did, where my friend was on it, and he said, yeah, I'm actually an internet ordained priest, and I married my brother to his husband here in Vancouver like a few years ago, and this guy was from Malibu. And I was like, wow. So I told this story in Geneva, and at the end of my panel, the guy said, oh, yeah, me too. And I'm like, hold it, you married off your brother? He said, no, I'm an internet ordained priest. So if you're an internet ordained priest, that'd be fantastic to weave through the story here. But I guess I'll start with mine. Like when I was going to school, I was totally an introvert. I was freaked out about going out and seeing people, and I don't think you really notice it when you're there, but now, now kind of over that. But so I think of people who are introverted and like, oh, I don't know if I can do this job. It's a sales thing. You just do it. Like I started my first job calling up people a day after my 24th birthday. Oh, would you talk about your RSP? When I started RBC Dominion, and just absolutely insane learning how to talk. But so that's my thing. So let's who wants to go first? It'll be jump ball. Whoever wants to tell us the interesting fact about you that's going to stick in people's minds 20 years later when they meet you in real life there again.
I could jump in if you want.
Yeah.
Maybe just giving a little background as far as, where I came from. I was actually quite an introvert as well, which is hard to believe, or no one would believe.
Totally.
My total circle in today's day and age. But when I was going through university, I was actually majoring in phys ed and geography. My goal graduating from university was to become a high school teacher, phys ed teacher.
See that
kind of thing.
Or a DA agent. Yeah.
Yeah. So, it's, I, at the time, Teachers College was quite competitive. I got waitlisted, and I said, forget this. If they don't want me, I don't want them. And I said, I'm getting in the financial business. Went back, did my management studies diploma, did my Canadian securities course, CPH, and, decided to get in the financial business. But, kind of at the same time, I'm going, okay, well, I started my first business when I was 19, like a painting home improvements company. I started getting government contracts by the time I was 20, for painting. All my buddies worked for me. You finish classes at 3 o'clock in the afternoon, you'd paint a house, an empty place till like 3, 4 in the morning and start school again the next day. So I've been very entrepreneurial. I traded my first stock when I was 16 years old. It actually ended up going up. So maybe that was a positive start to the business. Out of all my part-time jobs I had going through school, I had to pay for my own Globe and Mail subscription, getting delivered to my house so I can see all the stock pages and read up on financial business on my own. So, although my career path didn't necessarily match, initially didn't match what I was kind of doing underneath that, being entrepreneurial and interest in the financial business, it ended up, the career, I love this business. There's pros and cons to it. It can be quite rewarding, from a financial standpoint, but I would say that, you can never know enough. It's mentally stimulating, on a daily basis, and can be, incredibly rewarding from that standpoint. There's obviously some cons, which maybe I won't get into too much, as far as, long hours and entrepreneurship. It's not for everyone. It's, when you start up a business, you're also, it can be rewarding when things work, but you're also the last one to get paid, until you get there.
Yeah, it's always
or don't get paid at all for many years. But yeah, I absolutely love the business, and it's a great industry to get involved in.
No, it's not a bad answer from an introvert. That's good. Thanks. All right. Sheena, Nevin?
I'll go next. I guess Rob gave me the idea to maybe mention this. Is I'm pretty handy myself. I flipped a house before. I can do a lot of renovations. I've installed kitchens and bathrooms, flooring, drywall. I can frame entire rooms and paint. One of my first jobs was working at a paint store, and I can change a tire. So
Love it. Nevin.
Well, Sheena, I'm going to have to call you up then, because I don't know how to change oil. Like, I don't know how to do any of that
I know
stuff.
your shows are pretty good there,
I
man.
don't do oil changes. I don't do cars. I don't know I can change a tire. If I get into a flat tire situation, I've changed tires. The car stuff and electrical. I don't like touching electrical, but the rest of it, I'm pretty okay with.
So I don't know if this is that exceptional, but so after I finished getting my MBA from Northeastern in 1994, the very first call I got was from a guy named Harry Sinden. And Harry was the general manager of the Boston Bruins, and he was the guy that picked me in '83, the Bruins' first pick that year. And so he called me up, and so I went into his office, and I had an agent for my first contracts when I was 18, but my next contract I was 21, and all the other contracts after that I did myself. And most of the players on the team were very scared of Harry. Like, they didn't want to be anywhere near him. Even Ray Bourque, and Terry O'Reilly, and these really tough guys that could, do lots of things on the ice. But boy, oh boy, they didn't like, being around Harry, because, he kind of intimidated them. But for some reason, I just didn't have that. So I had been in Harry's office many times over the years, yelling and screaming over, my next contract. And so when you went into Harry Sinden's office, he had a desk, and behind the desk was his chair, and in front of the desk was a hockey bench. It wasn't chairs. It was just this hockey bench like you would sit in, when you're playing in the game. And the thing about the bench is when you sat on it, you were demonstrably lower than Harry. Okay, so you'd be looking up at him at his desk. And so I sat down on this bench for probably the fifth or sixth or seventh time in my life. And Harry looked at me and he said, "Nevin, I am so proud of you. You went off and got an MBA. That is just so amazing." He goes, "Next September, I want you to coach our minor league team in Providence, Rhode Island. I want you to do it for 1 year. And then the next year, I want you to come back and be the assistant general manager of the Boston Bruins." He said, in order to be a general manager in the NHL, you have to hire and fire coaches, which means you have to understand what it's like to be a coach. And I looked at him and I said, "Harry, I have absolutely no interest in hockey whatsoever. I am going to go out into business and see if I can figure out how to do something else." And I walked out. And people may not drop their jaws around that here, but on this call, but my hockey peers lost their minds because, that's just, the epitome of what they'd like to do. But again, I was too curious, I think, to stay in one domain for my whole life. And again, I've got friends that are, in the Bruins system. Cam Neely, Don Sweeney is the GM there now. They've been so successful in the sports domain. And I'm very proud of what they've been able to do, to transition from being a player to being more of an operator, I'll call it. But it just wasn't for me. And so, again, I think part of kind of, where many of you are on this call with regards to your career, you really, in some regards, do have to stick to your guns. I completely agree with Rob that, a job is better than no job. But at the same time, if you get into a job that hooks you down kind of not the right path, you want to identify that as quick as you can. So I'll just leave you with this. In the investment industry, if I buy a stock and I spend, I invest $1 billion on behalf of a client, we buy into IBM. When I decide and the team decides through their research that we don't want to own IBM anymore, there's a phrase, and the phrase is that your first sell is your best sell. And I don't think it's any different in your career. If you find in your career, this just isn't the right place for you, this isn't something that you want to do, okay? I'm not saying quit because you want to keep that income stream, but get out there and look around and go out there and find the thing that really does make you passionate. Because again, Rob said it, there's a lot of hours here, okay? In my investment career in Boston, I would get up at 4:30 in the morning, get on a bus. It would drive me about 30 miles into Boston. I would go to a workout place at 5 o'clock and I'd work out till 6. And there was a great network there. There were all investment people. That's all that were in that workout place. And I would work from 6 to 9 p.m. And then I would get on the bus at 9:25 and I would get back to my house at 10 o'clock. And there was no internet, or, this is 1994, 95, 96, 97. There's not really an internet. There is, but it's not really the one we're talking about today. And so there wasn't a lot of work that I would do from home. I would literally just go to sleep and, recharge the battery so that, when I woke up the next morning and, got on that bus at 4:30, the passion for being in the industry, it carried me for all of those years. Like, I don't really reflect on those years and say, gee, I was so tired, and gee, I was so, gee, am I getting the right pay for what I'm doing? I was just very fortunate to be in that environment. And so, again, like, so I'll just close with this. I'm on LinkedIn. Any of you want to reach out on LinkedIn and connect with me, I'm happy to do that. It's hard to give recommendations for people that you don't know, but you can look through my network, and if you happen to be interviewing with someone I know and you want to call me and say, hey, tell me about Jody, she was your marketing vice president at Canoe Financial, way back when in Calgary, can you help me with Jody? Because I know I'm going to be interviewing with her in 3 days from now. I'm happy to give you any insights that I have.
Love it. Thanks. Well, we're just over time, but I'm glad everybody's still on. Thanks, Harry, and the CFA Societies for setting this up, and Sid, of course, too. He's been pretty active with us to do all this. And Harry, you want to have any last minute things to say? Or
no, just want to
done?
Thank all the panelists, and James, to you for moderating this event. It's been a jam-packed session, as I said. As I said, it's going to be, and I learned a lot. I've been in the industry for over 6 years now, and I'm still learning as a CFA charter holder. So thank you to all the panelists, and James, to yourself. Just want to let everybody know that we'll be making a donation on behalf of the panelist and the moderator to one of our local not-for-profits here, Community Financial Counseling Services, as a gesture, as a token. So thank you for that. And we would also be encouraging our attendees to fill out the survey that we'll be sending out shortly after this event and presentation. And at the same time, we'll be posting this recorded event on the YouTube channel so that other people can also watch it and learn from it. So thank you, everyone. Just going to say, have a great rest of your day. Thank you.
Love it.
Thank you.
Thanks, everybody. Have a great day and rest of the week. Bye-bye.
Bye.
Bye, everyone.